Well, what do we have here from the economiccollapseblog.com, Mr. Michael Snyder? According to him, the next financial crisis has actually already arrived, at least in Europe, and people are starting to freak out. Really? Really? You wouldn't say. Quick look surprised. Did you know that the sixth largest bank in Spain failed in spectacular fashion just a few days ago? Many are comparing the sudden implosion of Banco Popular to the collapse of Lehman Brothers in 2008. And EU regulators hastily arranged a sale of the failed bank to Santander Bank in order to avoid a full-scale financial panic. Sadly, most Americans have no idea that a new financial crisis is starting to play out over in Europe. Now, of course, you and I would argue, what do you mean starting to? This has been ongoing. Let's rephrase that. Starting to be visible to the average person. Because most Americans only care about what is going on in America. But we should start paying attention because the EU is the second largest economy on the entire planet. And the euro is the second most used currency on the entire planet. The U.S. financial system is already teetering on the brink of disaster, and this new financial crisis in Europe could turn out to be enough to push us over the edge. If EU regulators had not arranged a forced sale of Banco Popular to Santander, we would probably be witnessing panic on a scale that we haven't seen since 2008 in Europe right about now. The following comes from The Telegraph. Spanish banking giant Santander has stepped into the rescue ailing rival Banco Popular by taking over the failing lender for €1, in a watershed deal masterminded by EU regulators to avoid a damaging collapse. Santander will tap its shareholders for $7 billion in a rights issue to raise the capital needed to shore up Popular's finances in a dramatic private sector rescue of Spain's sixth largest lender. It will inflict losses of approximately $3.3 billion on bond investors and shareholders, but crucially will avoid a taxpayer bailout. So again, they had the bail-in legislation passed a long time ago over there. They're getting bailed in. Sorry about the investors' luck. Sorry about the bondholders' luck. You lose. But at the same time, sure beats a taxpayer bailout like we had last time. But now that a too-big-to-fail bank like Banco Popular has failed, investors are immediately trying to figure out which major Spanish banks may be the next to collapse. According to Wolf Richter, many have identified Liberbank as an institution that is highly vulnerable. And he says, after its most tumultuous week since the bailout days of 2012, Spain's banking system is griped by a climate of fear, uncertainty, and distrust. Rather than allaying investors' nerves, the shotgun bail-in and sale of Banco Popular to Santander on Tuesday has merely intensified them. For the first time since the global financial crisis, shareholders and subordinate bondholders of a failing Spanish bank were not bailed out by the taxpayer. They took risks in order to make a buck, and they bore the consequences. That's how it should be, but bank investors don't like not getting bailed out. Now they're worrying it could happen again. As Popular's final days showed, once confidence and trust in the bank vanishes, it's almost impossible to restore them. The fear has now spread to Spain's eighth largest lender, Liberbank, a mini bankia, that was spawned in 2011 from the forced marriage of three failed savings banks. So on Thursday, shares of Liberbank dropped by an astounding, and I'm talking about last week, astounding 20%. Just last Thursday. Liberbank. Liberbank? It's not Banco Popular. It's not even the bank that bought. It's not Santander. Why is Liberbank dropping 20%? I thought this was just one incident with one bank. And remember that same bank that failed. They had two parties interested. We might buy them up. We got to look at your books. And they looked at their books. We can't make heads or tails of any of it. Your books are so cooked, so fraudulent, we can't even make you an offer. We have no idea what the hell we're getting into. So the EU, bureaucrats step in and, you're being forced shotgun married off to Santander. Have a nice day for $1. Because we know your books are so bad, we're going to give you to them for free. And now all of a sudden, Liberbank is in the spotlight. What made that happen? Oh, I don't know. Maybe they all cook their books? Anyone ever think of that? On Thursday, shares of Liberbank dropped by an astounding 20%. And that was followed up by another 19% on Friday. Spanish authorities responded by banning short sales of Libor Bank shares. Nobody can short that market. And that caused a short-term rebound in the stock price. No kidding. You mean people can't short it, so the price went up? Oh, no kidding. But we haven't seen this kind of chaos in Europe financial markets in a very long time. Meanwhile, Nick Giambruno is sounding the alarm about a much bigger bubble. At this moment, more than $1 trillion worth of Italian government bonds have negative yields. Again, I keep talking about Italy, back to Spain, Italy, back to Spain. Every now and then a little bit more Greece. Poor people of Greece, I feel so bad for them. Back to Spain, back to Italy. Oh, some stuff in the U.S., insane. Over $1 trillion of Italian bonds actually have negative yields. It's a bizarre and perverse situation. Lending money to the bankrupt Italian government carries huge risks. So the yields on Italian government bonds should be near record highs, not record lows. Negative yields could not exist in a free market. They're only possible in the current Alice in Wonderland economy created by central bankers. You see, the European Central Bank, or ECB, has been printing money to buy Italian government bonds hand over fist. Since 2008, the ECB and Italian banks have bought over 88% of Italian government debt, according to a recent study. The moment that the ECB stops wildly buying Italian bonds, the party will be over and the Italian financial system will crash. Unfortunately for Italy, the Germans are pressuring the ECB to quit printing so much money, and the Germans usually get their way in these things. But if the Germans get in their way this time, they could be facing a complete and utter nightmare very quickly. Here is more from Nick Giambruno. Once the ECB, the only large buyer, steps away, Italian government bonds will crash and rates will soar. Soon, it will be impossible for the Italian government to finance itself. Italian banks, which are already insolvent, will be decimated. They hold an estimated 235 billion euros worth of Italian government bonds. So the coming bond crash will pummel their balance sheets. It's shaping up to be a lovely train wreck, he said. And all of this is happening in the context of a global economy that appears to be headed for a major downturn. For example, the last time that global credit growth slowed down this rapidly was during the last financial crisis. And I keep saying this, but I'm not going to stop saying this. The amount of articles I'm reading these days, as in this year, that have that same line. The last time we saw this, 2008. The last time this happened, 2008. The last time, 2000. If I had a Bitcoin for every time I've had to say that phrase in once or more per article, I would be rich just in 2017 alone. This means there's absolutely a problem, and the central bankers and the governments are trying to just keep everything hush-hush. No, everything's fine, everything's fine, everything's fine, everything's fine. Consumer confidence level came out back to all-time highs. That's good. Housing back up to all-time high. That's not good. No, housing all-time highs is not good because they're way overpriced, and people are way over in their head over debt. I was eating lunch. I told you guys, a couple of my buddies, and I told them about a house I called on. I was like, well, this is kind of cheap. $340K for this one? This thing should be over $400. Let me call on that one. And the lady said, the real estate, that it needs about 60 or so, 60, maybe 70,000 worth of work. It needs a lot of work. But it would be worth it well into the 400s. And she said, and I was like, I don't know if I want to deal with that. She goes, that's the problem I'm having. Everybody that's calling on this, they're all approved. They get financing. They got the financing. But they don't have the extra cash to put into this to actually make it right. And that's the problem. Oh, so you're telling me no one has extra cash. Which means what? We're all living mostly paycheck to paycheck. But on paper, my house is worth so much, I'm wealthy. Right. And if you sell the house, take your wealth for a split second, and then you got to move into another house that's overpriced, then what do you have? No more wealth. It's gone. Well, that's interesting. So from peak to through the deceleration in global credit growth is now approaching that during the global financial crisis, minus 6% of global GDP, even if the dispersion of the decline is much narrower. Currently, 55% of the countries in our sample have experienced a negative 0.3% standard deviation deterioration in the credit impulse, which is median over 12 months, compared to 77% of countries in December 2009, when the median was minus 1.4 standard deviation. Of course, the last time global credit decelerated this dramatically, global central banks intervened on a scale that was unlike anything that we had ever seen before. TARP funds, too big to fail, $4.5 trillion Federal Reserve balance sheet that's still on there and not going away, right? Also, backdoor bailouts that weren't exactly passed through Congress to the banks also. But this time around, it is happening at a time when global central banks are very low on ammo. More importantly, back in 2009, not only China, but the Fed and other central banks unleashed the biggest injection of credit, i.e. liquidity, the world has ever seen, resulting in the biggest asset bubble the world has ever seen. And this time around, the Fed is set to hike rates for the third time in the past year, even as the ECB and Bank of Japan are forced to soon taper as they run out of eligible bonds to monetize. All this comes at a time when U.S. loan growth is weeks away from turning negative. As such, what kickstarts the next spike in the credit impulse is unclear. What is clear is that if the traditional 3 to 6 month lag between credit inflection points, i.e. impulse, and economic growth is maintained, the global economy is set for a dramatic collapse sometime in the second half of this year, which puts us September 23rd, 2017. In my opinion, that's an interesting date, isn't it? And he didn't say that, I'm saying that. There are so many experts that are warning about big economic trouble in our immediate future. I would like to say that all of the experts that are freaking out are wrong, but I can't do that. I have not seen an atmosphere like this since 2008 and 9, and everything points to an acceleration of the crisis as we enter the second half of this year. So when are the central banks going to run out of powder, dry powder? I refer you back to the 1988 Economist magazine cover. The phoenix rising from the ashes of paper dollars burning with a giant gold coin around its neck with the year 2018, and then get ready for a new world currency. What are the chances, as I've said before, that the richest family on the face of the earth, from what we all think, the Rothschilds, are part owners in that magazine, and they let us all know almost exactly 30 years ago to the date, which 2018 will be 30 years perfectly timed, as they said in 2018, 30 years from now, paper dollars will be up in smoke, and all right, with the amount of printing I just described to you that's been going on in the central banks globally, trillions and trillions and trillions, I'd say those dollars are smoking. They're smoking, about to go up like a tinderbox, so to speak, which would be perfectly primed later this year for big chaos to happen. Central banks, we've done all we can do. Now everything's collapsing. Brings us into 28. We're all feeling a bunch of financial pain. Government, help us. Please make it stop. Make the pain stop. The only way we can make it stop is if we all go and use the same currency. One world currency, if you will. We could solve a lot of problems if we just had one currency, because China devalued and they had to devalue. The U.S., we had to devalue. We've never done that before, but we had no choice. We had to do it. Now everybody's racing to the bottom. The valuations everywhere. Guys, we could solve this problem if we all just had one currency. Nobody could devalue it. It's worth one value. You can't compare it to something else. And you guys are feeling a lot of pain at home, and a lot of you lost your jobs. Yeah. Just make the pain stop, please. And imagine if they were to tell you, which I wouldn't count on this, but they were to tell you, we'll wipe out most or all of your debt as people globally. We're willing to write it all off because it's the old system. Everything gets written off. We start over with this new currency. Again, all your debts are written off. your paychecks will seamlessly, it'll come right back in. It'll be all done automatically. Who would say no? What debt slave, we are all debt slaves, what debt slave on the face of the earth is going to say, no, don't wipe out my debt. I want to keep my debt. I want to keep my old dollar that's being devalued left and right because I'm patriotic or something. I don't know, whatever. No, I'm in pain, expensive prices, everything. This is crazy. Make the pain stop, please. That's what people do. It's human nature, and we will accept the easiest path. That's what we always do. We accept the easiest path, or the path of least resistance. And that is, yep, let's go with this new world currency. What the hell? Right? And maybe it'll be a crypto type currency, which is all of us, guys in the crypto world, Bitcoin and everything else. Oh, yeah, good idea. Are we really sure about that? Is by chance this crypto a side show for us to get us all jazzed up about it? And that's actually what the club wanted all along for the new world currency. So it'll be an easy switch over to blockchain technology for the Phoenix coin, if you will. And there is a Phoenix coin coming out, I heard. Not ran by them. Or Phoenix something. It's like maybe not Phoenix coin, Phoenix something. What if I can find that? I'm pretty sure Phoenix crypto coin. Yeah, Phoenix. Yeah, actually there is one. It is. It's already out there. Not looking good. Down 12%, 12.7%. Phoenix coin. PXC. Horrible. Down 17%. Worth a fraction of a penny at the moment. So yeah, this is probably not the coin you're gonna want, if I had to say so. But anyways, take care.